Hello everyone, thank you for being here and for watching this video. First of all, I'm really pleased from the view that I'm getting from my last couple videos, and I also would like to remind you guys to please subscribe to the channel and to leave a like, comment, so we can keep this channel interesting and we can keep it up. So today's topic for me is really interesting and important. For the last 4 years we have had President Trump been praising his economy policies and the stock market. The stock market right now is at all-time high, but we are still in a pandemic. There are still many millions of people out of work, and unemployment claims are going up. And many parts in this country are about to place again new lockdown orders. Like yesterday, we had California that they're implementing a stay-at-home order, and California is one of the most important economies, not only in America but worldwide. So let's distinguish the two subjects. First of all, let's go to the basics and let's describe each of them. So what's economics? Economics is pretty much the field that study how people react to scarce goods. Meaning that, for example, you need to buy a new pair of jeans. You go to the store, and before you buy those pair of jeans, you make a bunch of decisions. First of all, what's your budget? If you like the pair of jeans, if you really need them, if you like something else, and so on. So before you make a final decision, you go through a good analysis. And this as far as microeconomics. When you have a group of people making the same decision over a major topic, then you have macroeconomics. In that case, it's all more about a single nation, because in that case, yeah, you're talking about interest rate, you're talking about GDP numbers, and so on. So like how those numbers come into place and how those numbers affect every single people decision, because the central bank with their interest rate, they influence how people react and how people spend their money. But as far as economics in general, it's just how the single individual react to scarce goods. Stock market, on the other hand, like any marketplace, is where people come together, then they discuss a good, and before they finalize the price of the good, they come together to find in the middle. So the two things are different, because you can have a bad economy and a good, and you still can have a good market. So why the stock market is at all-time high this year while we are in a pandemic, while our GDP is decreasing, while our unemployment numbers are rising, while people are filing more claims, and so on? The answer is simple. First of all, not everybody in America is investing in the stock market, okay? Unless you are an institutional investor, unless you are a retail investor, unless you work and your company offers 401ks and IRA and all other investment products, you are pretty much, you don't have a pen in the market, okay? I always recommend for people to invest some of their money into the stock market or any other type of investments, can be a real estate and so on, because unfortunately with the rates being so low for the last decade, if you just leave your money in savings account, your money is gonna lose its value, because inflation is gonna increase, and so the value of your money throughout the time is going to decrease in value. So that's why I always tell people and urge people that you need to invest in stock market or any other markets to be more knowledgeable now. And unfortunately, the educational system in America, but even worldwide, because investing, it's a concept that unfortunately it's more and more private, and it should be like a public concept. People should know how to invest their money and how to budget their expenses and so on. But unfortunately this doesn't happen, and also that's a reason why rich people get richer and poor people remains poor. It's because rich people know how to invest their money. Poor people, unfortunately, because they are constrained in their limitation, they don't know how to invest their money, and also because they have to save first before investing, if they can save. But overall, stock market is going up because we have had a bunch of companies, tech companies, e-commerce company, and any other companies that have made lots of money this year. You have had companies like Amazon, Shopify, Zoom, Peloton, all those companies that you can stay home and you can still make lots of money. Zoom, the guy became a billionaire this year. Okay, I think it went up 600% this year. It's the best investment this year. Peloton, stay at home workout, going up. Amazon, you can buy stuff or you can sell stuff with one click. You don't have to go to the store. Facebook, social media, they always go up. And then you have like robotics or semiconductor stocks like Nvidia, AMD, people are buying more computers, and Nvidia, AMD, they're providing the chips for those computers, and so on. So all those big companies that are profiting this year, pretty much even more than before, okay? But the single individual, the guy that is supposed to go to work, make the money, save up, provide money for the family, this guy is either seeing his salary cut, his hours cut, being laid off. So his budget is really becoming more limited than before. So that's why the two, they don't connect with each other. The stock market, unfortunately, it's made up of big companies, and those big companies that are profiting more than ever throughout the pandemic is because people, unfortunately, they depend more on those companies now than ever, because whenever you go to the store, you need the toilet paper or Lysol, all those products for hygiene. You go to Walmart, you go to Costco, all those big retail stores, Target. But what's going on with the small business owner? They're forced to close. What's going on with the private person is selling his merchandise? It's forced to close. So at the end, who is losing this battle this year is the small business owner, the simple guy that goes to the store every day and is not buying anything. So at the end of the day, the stock market is going up because people are buying the same stuff from the same companies. Those companies are increasing in value, and since they're so big, they are shifting the market to all-time high. Because don't be surprised, like, there are a bunch of companies that are losing tons of money, but the big companies are making money, and those companies are dragging the market up. Because if you take a look this year at the statistics, if you take a look at the analytics of the stock market, most investors, they are buying the same stocks. They're buying the same companies. Zoom, Peloton, Nvidia, AMD, Facebook, Apple, Microsoft, Tesla. They are buying the same companies, and those companies are going up and are driving the market up. But there are so many small companies that are in the stock market that are getting crushed. Okay, then you have airline companies, cruise ships, and so on. They are, of course, getting hit so hard from the recession. But at the end of the day, the companies that are thriving in this market are bringing the market up. But overall, our economy is not the reflection of the stock market, or I should say the stock market is not the reflection of the economy. The stock market is the reflection of how the 1% is doing, how those rich people are doing, because it's impossible that in a pandemic you have rich people getting richer and the middle class and poor people are getting even more limited in their financial resources. And unfortunately, our system is broken. That's the truth, because you cannot have a market in 2020 with a pandemic, people forced to stay home, people forced to stay at work. You can have a stock market at this level. That's greedy, that's selfish, and really dangerous, because the vaccine right now is driving the market as well, because they're saying that once we have a vaccine, we're gonna go back to work, so the market is gonna go up and up. But guys, rolling out the vaccine is gonna take time. Not everybody is going to be able to take the vaccine as soon as it comes out. Then there is a process, because the first people that are gonna get the vaccine are people that are exposed to most risk. So you have nurses, doctors, those people that they are always in contact with infected patients. Then you have people that live in nursing home and so on. Okay, but the major workforce, people in my age, in their 20s or in their 30s, in their 40s, people that are considered low risk, then probably either they're not gonna get the vaccine, or if they get the vaccine, it's gonna be at the end of 2021. Okay, there are many companies right now that are on the brink of a collapse, because if you go to your local mall, okay, and if you go shopping to your small usual business owners, I guarantee you that out of 5, 2, 3 are out of business. Okay, and those people cannot be back up after next year. They can't. They won't have the financial resources to be back up. So the damage that this pandemic has done in our economy, we will see the damage next year, 5 years from now, and the next generation, so on. Okay, the stock market is not a reflection of how economy works. Economy depends on you. No, you. Where do you short? Where do you shop? What do you buy? Those things that you do, your everyday decision, that's what affects the economy. If you keep buying from those big giant e-commerce like Amazon, eBay, Etsy, or Shopify, and so on, okay, those companies are getting richer, but the other people that are providing the same good, but probably they have to have a higher price tag, they're suffering the most. We are killing our middle class. We are killing our American dream, and unfortunately, we need a total shift in our economy policy, because it's impossible that after 10 years, okay, since 2008, after 10 years, 12 now, interest rates have been this low. Okay, people are saying, well, interest rates haven't gone up because we need to inject money in our economy, we need people to spend because our economy really risks a total collapse and so on. Folks, here in the US, no, like if you live in some part of the country here, no, and even if you make $100,000 a year, for example, in New York or in California, even in Texas now, no? Texas is getting super expensive. $100,000 a year, like, and you rent, you are not even able to survive. $100,000 a year, and that's the fact of keeping interest rates low and low and low, because you have interest rates low, okay? By having interest rates low, meaning that more people refinance their homes, more people buy houses, and that this drives the price up. When the price goes up, people that rent, they're gonna increase their rent. And right now, it's more expensive to rent than to buy a house with a new mortgage. Okay, so we are creating a big boom in the real estate. We're creating a big boom, but this boom can really compromise future generations, so on. Stock market all-time high doesn't reflect the economy. Economy depends on you, your single decision, and so on. Okay, stock market, it's about the 1%. Okay, the 1%, how much money they make, if they're profitable, and so on. You're literally, when you buy a stock in the stock market, you're literally making the 1% more. You're making the 1% richer. Okay, when you buy the stock, you are gifting the 1% more money. Okay, so I'm not saying do not invest in stock market, because you need to invest in stock market because it's one of the best way to. It's one of the best way to become more profitable and to increase your savings and so on. What I'm saying is this: it's important to distinguish the two. Okay, stock market is not the reflection of the economy. Okay, stock market is driven by major factors, driven by interest rates decision, is driven by psychology, news, many things. Like now, it's all about artificial intelligence, algorithms, people reacting to the news, and so on. Fundamental news, like if a company is profiting or not, and so on. Economy is about you, how much money you have in your pocket, how much money you're spending and you're saving, and so on. Right now, we're living in the really bad times. We're living in times where people are suffering a lot. So do not take for granted that the stock market all-time high means we are living in a good economy right now. Economy is bad. Those unemployment numbers, they do not reflect the true unemployment number in the US, because they do not take into consideration many important subjects. Because if you are not looking for work and you be unemployed, okay, you're not considered in the unemployment number that they study. Even though you're unemployed, if you're not looking for a job and you be unemployed, you're not considered in the unemployment numbers that they provide to you. So even though unemployment is roughly around 7% right now, the real unemployment numbers is more than 10% right now. So take everything for a sort of granted. So right now we're living in a tough times. Make sure to help out those small business owner, because the 1%, they're always going to be rich. Like, they can lose millions, they will be fine. But the small business owners, 1 month out of work for them, that's big damage. They're not gonna survive. Those people are the people that are fighting for the American dream. We need to support them. And if you're a small business owner, please, you can leave your website down below, and we can urge people to go shop on your website and so on. We need to help each other out. Stock market, yes, it's good as far as investment. You can increase your savings, and I always recommend to invest outside of your savings. Don't just leave the money in the savings account. But it's important to distinguish who is becoming richer and richer, okay? Stock market, it's all about the 1% getting richer and richer, and you're trying to become richer as they get richer. Economy, it's about how you decide, how you make your own decision. And right now we're living in a pandemic. People don't have any more money in their pocket and they're struggling, okay? So then don't get fooled about stock market all-time high. That doesn't reflect the real economy that we're living right now. Thank you for watching this video. I went over the top, but hopefully I clarified some subject. Hopefully you liked it, and please leave a comment, subscribe and a like, and I look forward to talk to you guys again. Bye bye.